This is Professor Russell James coming to you from Texas Tech University. Welcome to today's lecture from Visual Plan Giving, an introduction to the law and taxation of charitable gift planning. Welcome to Elements and Timing of a Charitable Gift, Part 2, Checks and Credit Card Gifts. This is Professor Russell James. Now consider some additional examples demonstrating when a deductible charitable gift occurs. Suppose there is a scenario identical to the example from the previous lecture of a check mailed to a charity. However, in this case, the check bounces. How is this scenario handled under the income tax charitable deduction rules? The answer, as always, is that the gift is complete when the donor delivers money or valuable property to the charity or agent of the charity. The key understanding in this case is that an invalid check was never considered to be valuable property. Because the donor never delivered valuable property to the charity, there was no charitable gift. In a sense, the future knowledge that the check would bounce is attributed back to its date of origin, meaning that at no point was the check ever valuable property. Because the donor never delivered valuable property to the charity, at no point did a charitable gift occur for income tax purposes. How then should a post-dated check be treated? In this case, the post-dated check is delivered to the charity's agent, the United States Postal Service, on December 26. However, the check cannot be deposited prior to January 1 because it is post-dated to that day. So when is the gift completed? The critical piece of information in this scenario is to understand that a post-dated check is considered to be a promise to pay money in the future. Unlike a normal check, which is immediately considered to be valuable property, a post-dated check is considered to be only a promise to pay in the future. A promise to give money or property to a charity in the future does not constitute a deductible gift. Thus, the post-dated check is not a completed gift when it is transferred to the charity or the charity's agent. Once, however, the date of the check arrives, it immediately becomes valuable property. If at that time it has been delivered to the charity or the charity's agent, then the gift is complete. Thus, in this scenario, the gift is complete on January 1. That is the date on which the charity has received valuable property. On December 31, the charity did not have valuable property, but instead had only a promise to pay. On January 1, the promise to pay was converted to a valuable negotiable instrument, and thus the gift was complete. What about a credit card gift? Suppose a donor makes a donation by credit card and the charity is credited with the funds. However, it is not until much later that the donor actually makes the payment on the credit card to pay for this transfer. At what point was the charitable gift completed? The answer, as always, is that the gift is complete when the donor delivers money or valuable property to the charity or agent of the charity. In this case, the donor delivered money to a charity on the date of the credit card transfer. The fact that the donor borrowed this money is irrelevant. The donor delivered money to a charity, meaning that the gift is a completed gift. This is true even if the donor never pays the loan used to make the gift to charity. Consequently, the gift in this scenario is a completed charitable gift for income tax purposes on December 31. When or if the credit card bill is later paid is not relevant to the timing of the gift. Let's now consider a slightly different example. In this case, the donor earns rebates from her credit card company. The donor clicks online to donate those rebates to a charity. Later, the credit card company mails a check to the charity. At what point is the gift complete? The answer, as always, is that the gift is complete when the donor delivers money or valuable property to the charity or agent of the charity. This does not occur when the donor clicks online to donate the rebates because neither the charity nor the charity's agent has yet received any money or valuable property. Instead, what has happened is that the donor has instructed her agent, the credit card company, to deliver money to a charity. This instruction is not a completed gift until the donor's agent actually delivers the money to the charity or the charity's agent. When the donor's agent, the credit card company, delivers a check to the United States Postal Service, the charity's agent, addressed to the charity, the gift is complete. Thus, on day 9, the donor's agent has delivered valuable property to the charity's agent, making the gift complete for income tax purposes. What about a legally enforceable contract? In this case, the donor signs a legally enforceable contract in the form of a pledge to donate. As is required by accounting rules, the charity books this legally enforceable contract as an asset in the charity's ledger. The charity, in this case, then sells the right to collect on this pledge to an accounts receivable purchasing agency. As a result, the charity receives cash from the accounts receivable purchasing agency and then spends the cash. Only later does the donor actually fulfill the pledge by making the agreed payment. Given that the charity has already received and spent money resulting from the pledge, when does the charitable gift actually occur for income tax purposes? The answer, as always, is that the gift is complete when the donor delivers money or valuable property to the charity or agent of the charity. Prior to the donor fulfilling her pledge and actually transferring money to the charity, there is no gift. Although it is true that the charity has received money, the charity has not received money from the donor. The only thing the charity has received from the donor is a promise to pay money in the future. And a promise to pay money in the future to a charity is not a completed gift until the money is actually given. Consequently, there is no charitable gift until the donor actually pays the pledge by transferring money to the charity. Whatever the charity happens to do with the pledge in the meantime is irrelevant to the issue of when the charitable gift occurs. This has been Elements and Timing of a Charitable Gift, Part 2, Checks and Credit Card Gifts. Join us next time for Part 3, Keeping Special Rights.